So, good evening. Pretty interesting day in the market, I would say, myself. Hopefully, everyone. Am I echoing? Everything sound good? Okay, it's good. All right, just making sure. So tonight's review, right? I'm going to be talking over the goals for February. Now, not just my goals in general, but things that you guys should set aside or plan for your month, right? Some things that you should aim for, as well as mistakes made during our trading session, right? Whether it's today's trading session, yesterday's trading session, or tomorrow's, right? And just a few kind of key takeaways from the market that I had today, as well as in general, right? My kind of overview of the market, which direction that I'm kind of leaning towards. Right now, I am swinging the February 4th expiry on the Qs. I'm trading the 370s right there. They hit 260, 250. So, and I'm in there from 140. So I'm looking for a 280, kind of a 280. $3 kind of range for 100% kind of swing. We opened that one up yesterday, but I'll talk into why I took those. Yep, here, Char Husher's down, so I'll fix that. Thank you for tagging me. No, I'm not actually an anime character. Coming over Exxon, I didn't trade it, but sure, we can check it out. So, right, a lot of people, and I've been talking about this with Shinobi and a few other people, Palmer as well, and going over with what has happened with the market, right? Once everyone was overly bearish because we had that break in base to the downside, right? A lot of novice shorts came in, and it's the same thing when we have a overly kind of bullish rally, right? A lot of novice longs will come in and get taken advantage of, right? So, from looking at this from a price action kind of technical analysis perspective, right, we got a very clear push out of, where's this at? Very clear push off of this 340 level. We had an intraday, or not intraday, but a daily bottom wick here that turned into a demand zone that we consolidated in for about 4 or 5 days. And we got a clear channel break right there, right? That channel breaking through. So also this candle that we have put in here, of course, a bullish engulfing, but this candle here, right? It does show strength, but also a little bit of weakness. It was nice that we held the mid candle from the day prior, but it did show, just a very slight amount of weakness. Now, what I was looking at today, and what I had been trading with intraday, let's see. Are we good in the Discord? Twitch won't load for you guys? Let me make sure before I continue. Is everything all good on the Twitch stream? Okay. Okay, I just want to make sure, right? Because I am streaming in the Discord and on Twitch this week, right? So, what we have kind of noticed is that yes, everyone is drooling to trade those sell-offs, right? The dumps from last week or so. These big dumps and stuff like that. Something very similar here. We're all looking for that and aiming for that, but taking into account the current kind of macro trend, right? This was a very clear lower high and lower low trend. But remember, we should be focusing on the two phases. So the two phases of the market that I typically experience when I'm trading. Now, other people may call out, 4 or 6 different other phases, but there being two in my mind, right? And that's consolidation here and trending when we begin to push in one direction very strongly, right? So take note of that. You will see this very clearly, right? So we trend here, we're consolidating for a few days, moving sideways, then we trend, right? Very quick consolidation, then back to trending, just a little pit or a short pit stop here to pick up more ads for their short. And we trend, right? Lower highs, lower lows. Now we're back in consolidation. Um, and you can look at this trend on a macro or a micro perspective from a day trading, intraday kind of time frame, and take advantage of it. So we can see here, normally what you're looking for a consolidation range, right? I mean, if I draw this one up here, since it is a prior experience, right? You mark the high and the low of this consolidation range. You want to see a strong break. So we see this very clear breakthrough here for the consolidation, and it's going to choose a direction, right? Same thing here, right? Consolidation, we would expect this for shorts if they were strong enough to reshort this and buyers begin to sell their position that they've added here, right? Buyers turning into sellers, adding into that selling pressure, but that's not the case that happened, right? We pushed up and then we got a very strong break. We see this candle here. Now I wanted to talk about the experience that we had yesterday. A lot of traders, in hindsight, this is a very clear trend, but throughout trading it, coming off of the weekend and looking for more short perspectives or trades or sentiment, anything like that, we kind of got taken a little bit too biased in our kind of perspective of the market, right? Our sentiment and where we wanted to trade or what we thought the direction would be. So we were shorting each of these pops, right? We've traded this chart before. This looks, kind of difficult to trade, maybe choppy, this or that, whatever, right? Just flip it upside down. So you type negative QQQ and it'll be the same time frame chart. Look, this is the day prior, right? We've traded dump days like that. So what may flip or confuse a lot of traders is not trading very recently from the long perspective and being caught in that bias of trading short and only trusting those dumps, right? Even though that it was going up, because this is the inverse chart, right? It was going up throughout the day. It was kind of a slower mover, right? Lots of doji, small body candles, things that you would think or would define a sense of weakness in the market. So I want to talk about a little bit of the goals for February, right? We started a new month, a new week, right? Obviously this week, fresh week. Today is February 1st. And yes, I do look at it like, hey, you don't change too much, right? Continue doing what I'm doing with my trading plan and my trading style. I'm not looking to be or change my trading style completely, but we should look for goals for improvement. Now, a lot of people, they have, goals like, hey, I don't want to be, I want you to dig deeper into this, right? So I had the pop quiz and from today, and it was asking, what are your goals for February? And, of course, people are going to want to say, oh, I want to be green. I don't want to lose any money, this or that, right? But, those are very broad kind of goals, right? They're not very descriptive or, pertaining to one kind of, fault or experience that you want to overcome, right? So maybe if you are a trader that cannot hold on to trades, or you're a trader that has a hard time breaking down price action, right? Dig a little deeper into that goal that you're aiming for February so that you can kind of ascertain what you need to work on next and focus on to achieve that goal, right? I can sit here and say, hey, I want to be rich, but that's not going to give me a guided path or plan as to what I need to do to take my trading or whatever craft I'm doing to the next level, right? As a trader, there's never a point in my trading career where I've been completely content with my trading style, right? There's always room for improvement, and you will always be a student in this craft. I've talked to traders who've been trading, 10, 15, 20 years, and we can both learn from each other very much, right? I spoke with Bear one time, and he was talking about, the ideas that these newer traders bring to the market are very fresh and very profitable because it is a different perspective. So, right, some goals for February that I think a lot of traders should be working on or towards at least would be proper risk management. Rule number 1, right? There's no trade unless you have a defined stop loss. I see a lot of people taking trades just blindly, maybe even marking a stop loss or a general area and not respecting it due to hope or because they possibly only have so much buying power for the day. So they want to use that money to their best advantage. And if they stop out, they feel like they wasted the trade, they wasted the money. But typically that ends up making matters much more worse for that trader. As well as scaling out consistently. So I want to talk about, I'm going to go over a few things like how you should scale out, especially when we are having a choppy kind of day. Today was rather choppy, and we talk about, each day after 2 o'clock, 3 o'clock, if we've been ranging for a few hours, that, an event is going to occur, right? We should see a strong trend, but either between buyers or sellers, one of them covering or one of them stopping out. So you can see here very clearly, right? We have a high range and then a low range right there, right? We're ranging, okay? But a lot of traders, whether or not they made money on this downtrend this morning or this uptrend there, for those nice kind of trend moves, right? These provide 30 to 100% moves depending on which, strike or contract price you trade. But this is where traders give it all back, right? All in this consolidation. This is where they give it all back. And it's a difficult thing to trade, right? Because you're expecting, hey, I want it to rip up or down. And then it's frustrating coming back to the market, possibly after only taking scalps or, taking complete losses throughout this range, just to see it give you exactly what you want, right? A range up or break up to the upside. You even get a very clean break in base. Look at that break up. Base is on the 9 EMA and this previous supply here, noted by this upper wick, right? Bases, and then continues upward, right? So I want to talk about, how you can adapt your trading to trade this, right? And when you should be scaling out and when you should be scaling back into the trade. So yes, we have the high mark there, but we can see that, one second. We can see that's pretty far, and there was originally a resistance level right here. Okay, and then there's this kind of bottoming wick. You can kind of mark a demand zone here. I'll make it a little bit larger, but you can draw a demand zone right there on that bottoming wick. Looks like a tweezer bottom just about. Okay, 1 second. So I'll draw that demand there, and we'll just leave this as resistance, right? This general area. I mean, I could draw a supply zone from the top of this wick to the base of this body, I guess. Right, you see that? Top of that wick to the base of that. So now you have a channel. Now, of course, in hindsight, the review, it is all very obvious, but if it's obvious in hindsight, then that means it worked out accurately, correct? So, you can see here that this was a level, right? These are being respected. So when you're trading options, okay, you do not want to be a breakout trader. Most of the time, you will get stuffed. Just like a lot of these breakout traders, right? So if this was their resistance level here, right? Someone bought a call right there. Someone had to have, right? Because it reversed. There's always a buying and selling between buying. Someone bought a call there because of the breakout. They instantly market slapped or slapped the ask or something like that, right? And what happens to them? Yes, their theory in hindsight, their thesis is correct. It does go up, but the entry is so poor and so undesirable that, this is very clearly a short risk favored opportunity, right? Hey, there's a level here. If I take a short there, I'm going to stop out where this person is buying, right? But it has to have a strong close. So someone just asked, Maplestax says, do I hold during consolidation? And one thing that I really want to talk about is this. So in a very clear trend, obviously this is after hours, so this is different, but in a very clear trend, like this, right? You can hold on to your trades as long as the EMAs maintain, right? Higher low, higher low, higher low, right? Depending upon theta decay, if you're trading a further expiry out, you'll be much safer and, preventing yourself from experiencing that theta decay. But, everyone wants to be able to take a trade and hold on to it as long as they can until it feels good enough to sell, right? That is the basis of trading for the new trader or the novice trader. But, where they fail and why traders tend to lose all of their money in this consolidation is because they fail to adapt, right? I have to choose the right tool, the right setup, the right strategy for the current price action, right? And we go back to those two phases. There's consolidation and there's trending. You have to be able to identify what phase you're in when you are taking that trade. And when you plan to take a trade, you have to identify, hey, is this a longer day trade? Am I going to hold this due to EMAs or something like that? Or is this a scalp, right? Is this a much shorter time frame trade? So, and I want to talk about this, right? Someone in chat saying breakout traders are lazy. I've said that a million times. I still stand by that. Breakout traders are lazy. They're waiting for someone to do the work for them. They don't care to put in a little bit more work or thought process into the trade, and therefore they're not making as much and taking on much more risk, right? So whereas the rule of thumb is, hey, if you want to go long, you buy in the downtick, right? You buy in demand when it's shoving down. I know psychologically it is difficult to buy these big red bars shoving into demand, right? But that is what the experienced trader is doing. They're taking the trade from zone to zone. When it comes back to the zone, you take puts, right? Why do you take puts? Because your stop out or your stop loss is right there, the high of the range, if it closes strongly above it, right? Remember, strongly. You don't want to see large upper wicks. So that 360, 369 is the resistance, and the support or the demand, right? 362 practically. This level, 361.97. So why do I say breakout traders are lazy? They didn't buy a dip. They didn't put the thought process or brain power behind their trade to buy a dip, right? When it is shoving down, right? Because when you break over VWAP, of course, especially on this far extension and far away from the 9 EMA, you're going to get it pulled back, right? It's going to gravitate. At some point in the day, you know for a fact that price action will touch that EMA, right? So if you know for a fact that price action will touch, those candlesticks will touch that EMA, then why are we buying very far extended green candles or red candles from the EMA, right? Wait for the reaction to that EMA like these buyers did here on the 9 and scale out over resistance. So let's say you take a trade here, right? You go long here. You go long right there, okay? Now, you will stay in the trade depending upon your thesis, right? Whether or not it is a scalp or a longer day trade. Since this was a big push up and its first pullback, maybe you call it the second, right? I would have probably held this for a little bit longer, okay? So, or tried to, right? Being like, hey, we broke over VWAP, breaking base, the 9 EMAs are holding. I want to hold this until the 9 EMA holds. But also, not only holding that trade or not only selling that trade in regards to the EMAs, right? I was a naked trader, price action based trader before the EMAs. Okay, so and I will stay to that. So if you take a long entry there, your goal, right, is the most recent pivot. In an uptrend, you get higher highs and higher lows, right? Something like this: higher high, higher low, higher high because this point breaks over. You see that? And then higher low, right? Because this point is never broken, right? So that's what you want to see: higher highs and higher lows in an uptrend, right? Higher high, higher low, higher high, higher low. So if you get the higher low, you're aiming for the higher high. But on the higher high, on this break, what are all these upper wicks telling you? If you don't even take the trade, if you're just looking at it in the review, what are those upper wicks tell you? They tell you that there's a lot of selling pressure. So that means when you get a pivot break, depending if you're trading to the upside or the downside, you need to scale out. So you get a higher high, right? Higher high equals scale out, right? In the uptrend. And look what happens here, right? You get all of these buyers, remember, buyers turning into sellers. Now that shows strong strength in the supply. You can use this supply to short, right? Using the high resistance level as your stop loss, your risk area, and aiming for the zone that you just brought it from, right? It's also aligned with VWAP and the 5-minute 200 EMA, a very, very strong support. Remember, when I take a trade, I need 3 confirmations. So I have in this trade right here, you have, and we took this trade earlier, right? I took these right there. We take this in demand, the 5-minute 200 EMA, as well as VWAP. Okay, 3 levels that 3 different you have 3 different perspectives that traders will trade based off of. Okay, you have traders that only trade supply and demand. You have traders that only trade off of VWAP, right? Institutional traders, or HFTs, the algorithms, right? You have the 200 EMA algorithms trade up based off of that as well. So, right, use that in Confluence. You have a healthy level of support, even though it looks scary, right? But you don't stop out until you get a candle closing strongly. Okay, this is where people get wicked out. And I can talk about how you prevent yourself or recuperate some of those losses through the 84% rule, right? So this is kind of a different strategy that we'll cover. But let's say you take an entry here long in demand and you get wicked out, but you're like, dang, that candle didn't close. That actually shows an immense amount of buying pressure. It shows very aggressive buyers shoving their bid and holding their bid on the base of that demand. You can see very clearly here, no candles closing under that. So if you stop out right here, right, you get wicked out, right? People call it a stop loss trade. Okay, so if you get wicked out or stop loss rated, right, I'll mark that in red. When price comes back to your entry, so you see price coming back, you can take your same entry or a little above it. So let's say that you're not gonna, you're not as confident the second time around, but you take a little bit above it, right? The 84% rule says that 84% of the time you rebuying your same entry after getting wicked out or something like that, it will work out for you. And 1, it will recuperate your losses, and 2, it will prove your thesis to be right, right? The whole thought process behind it is that your thesis, hey, you went long here, you bought in demand, you're hoping for this to go up. Your thesis was correct, but maybe your execution, your stop loss was too tight, maybe paper hands, maybe weakness in holding or anxiety or anything like that stops you out, right? So take it again. Remember, this can only be used on true reversal points, near strong support levels, demands, indicators, anything like that. Okay. So I want to talk a little bit more about scaling out. It's one of the most popular questions I get, and I think one of the most simple, because people are afraid. It's like a relationship. It's like, oh, I don't want to let go of this, right? I don't want to let go of my shares or contracts or whatever you're trading. But that's how you make money. You have to let go of them. It doesn't matter if the trade rips, 20 points after in the direction you were trading. It does not matter, okay? All that matters is that you are taking money from the market and putting it in your account. If you can do that, that is the anomaly, right? Market makers want retail to lose. That is, we're like chickens to them, right? We make them money. We just keep coming into the barn and making them money day in, day out, right? How many people are red compared to green? And I'll tell you, for retail, it's always, red or negative traders always prevail over the green, right? That is the anomaly. So take money where you can. So let's say that, hey, you take a short, not the best entry. Let's say you take a short here, okay? Not the best entry, but still not bad. You have a low right here. So your goal, right? You take a short, it pops up, consolidates. Your goal, right, is to break that support. So when it breaks the support and creates a lower low, remember, this is in a downtrend. Remember, higher high equals scale out in an uptrend. When you get a lower low, that equals a scale out. Lock some of that profit in. Because what happens if you don't? Oh, we're dumping. I want to hold this. My contracts are going to go 2-3 times, right? They're going to go 50, 100, 150%, whatever, right? You're sitting there, oh yeah, I'm hoping that the euphoria's got you locked up, right? They take the money away from you instantly, right? You get the first lower low. If you're not selling on the pivot scale outs or the pivot breaks, right? Lower low, see that support breaking? If you're not scaling out on that, someone else is going to, and they're going to take your lunch, right? So be aggressive. Be aggressive with selling. A lot of you guys are so aggressive when taking entries, but you're passive when it comes to scaling out. I have a few questions here in the House of Stacks, right? It says, can you remind how to spot consolidation after a trend? After a downtrend, when reversals happen, I get caught up when it pulls back. Okay, so sure, I'll clear this out. Now, like I said, I didn't know that this was going to continue to range, right? We get a VWAP break right here, VWAP break, and I'm looking, okay, I want to see a base. I see the EMAs cross right there, right? Oh, we get a pullback. It's absorbing on the 5-minute EMAs. That's pretty strong. Oh, we're getting a higher high. So, yeah, I was looking for these EMAs to hold, right? That's what we would have been looking for in the trade. But when we see them fail, always thinking about, hey, I need to be adaptive. I need to be fluid with the market. If this fails, right, watch this. Always look, hey, where's price going to fall if this level fails? Don't just sit there like, oh man, I got stopped out. Oh, this trade didn't do what I wanted to do, it to do. So I'm going to sit here and complain about it and sulk, right? And sultry. No. If price failed your entry, look for the next setup, right? I was having, I was fighting the trend. I'll be completely honest today. I was fighting the trend a little bit. And then I got green back after we made this higher high, right? So then after I got green back, I was like, okay, I'm playing defense mode. All I have to do is look for where those buyers and sellers are trading in a range, what is crucial to be broken. So, like I said, this was the resistance, pretty weak break, right? Identify your support and resistance for the current trend. So like I can go to a different day here. Okay, like this. This is perfect. Okay. So right here, we don't know that this is going to consolidate, right? But in the time being, it is pushing up. We see the EMAs holding. Okay, remember the two phases: consolidation, trend, right? Consolidation, trend. Okay, now we're back in consolidation, trend. Like, see, now you're getting a lot more weakness, but watching the price action. So you get a big push up. When it pulls back, mark that support. That's your most recent higher low, right? So like this pushes up right here, right? This pushes up. When it pulls back and where it bounces, mark that support. That's your level that needs to be maintained. That never fails. That's why you get a push up like that. Okay, so this pushes up. Mark your support. Okay, now you have it's all about pivots, guys. It's all about pivots. This is how you're going to identify what phase you're in. So it pushes up. Okay, great. We get a higher high. Okay, oh, this fails, right? This level kind of fails. It comes back, pushes in that support. Okay, so yeah, now you have a high there, but you always think about other patterns. This is head and shoulders, right? You can look, extend that to the right. You can see that, hey, when this pushes back down and this pushes back up, it's consolidating, right? Pushes back down, support, back up. You can very clearly see that. But don't get caught up into the bias of trading trends all of the time, because that you're going to be trading consolidation probably 60% of the time compared to trends maybe 40% of the time, right? What are they doing right now? Okay. A lot of people have went through chop last few days, maybe off of this morning. This is straight advertisement, right? They take all your money, right? Depending on how you traded it, they take all your money in the consolidation phases. So let me clear this out. This is where all the retail money's lost every day. Billions of dollars lost in the consolidation. And then they give you something like this. They give you a trend like that, right? That's advertisement. Hey, come back. Try again tomorrow. You were close. Okay? It's a mind game every single day, right? Hey, you lost there, but you can get this maybe tomorrow, right? Here, end of day. Here's the advertisement. Okay, and everyone's screaming bullish, right? I have been bullish the last few days. That's kind of why I fought the trend this morning, because I thought that we would get a dip down, maintain a higher low, and from pre-market, this level right here, this general area, and push up. That's not what happened, so I had to respect it. 1 second, let me make sure. As well as Darkwing Duck says, would you enter the trade when the candle enters the support demand zone if playing consolidation, or waiting for the candle to close then open? So like I'll go through like what happened here in the trading floor, right? So right here, think right here on the cues. Oh, 1 second, guys. So let me just mark this range here again to keep it kind of clean. I had this. Okay, so what we had here, right, in the Discord for the callouts, I said tight risk under, oh, wait, that was for Boeing. 365 calls on QQQ, tight risk here, but looking heavy. That was at 12:44 p.m. Okay, today, Tuesday, February 1st, 12:44. So let's go to 12:44 on the 365s. I think that's right here. We'll zoom in on the 1 just to get the exact candle where I called that out. $12.44 right here. This candle right there. Okay. 12.44 bounces right out of demand. Now, we were trading this on the 1 minute. I said it looked heavy because remember, for your EMAs, the 1 minute gauges how strong a current a trend is, right? So I was seeing, okay, hey, the 1 minute 9 and 20 shaving this off, 1 minute 9 and 20 shaving it off, but we did absorb this demand. There was this VWAP here, and on the 5 minute, the 200 EMA, right? So I took this demand because, hey, it's not better risk for me to go short here, right? We had the short too as well. I had a put. I was also trading the, where's it at? I think I took the 360 puts or something like that. Yeah, 360 puts right on the 1 minute 9 EMA tap. And when we pushed down into this demand and I kept seeing these bottoming wicks, I was scaling aggressively because what is the rule that I always talk about, guys? Remember, the prime short entries were up here in this supply or this resistance. I have a later short entry here. Now, I am looking for that flush, but if it's not there for me, it's not presented, then I can't trade it, right? You can't trade what's not there. So if I take this short here, and I scale out in this demand, right, I see that, hey, the risk for the longs is much lower. The stop out is right here under that wick, right? That's your stop loss. If it closes very strongly below it on a larger time frame, like the 3 or the 5 minute. Okay, so we take those 365 calls right there, right? And I had this downtrend break on stream this morning, and, you know, we had a very clean push up. Where were we going to scale, guys? Right? Look at the demand or look at the supply zone. You just trade back and forth in this range. How many times? This is what is going to test you between, you know, hey, are you a euphoric trader, a trader based off of euphoria, or are you a true technical trader, right? Are you truly trading zone to zone? Those are some of my favorite trades. But sometimes some of my most annoying trades because, yes, they seem so simple and so laid out there for you, but you know, you want to be trading a trend. You want what's easy. This is not as easy. You have to kind of calculate more, adapt more to the current trend that's at hand, right? This consolidation channel, and you know, be happy with what you're gonna get. This right here was 20% moves back and forth. Okay, now whether or not you were able to trade this multiple times back and forth is up to your kind of account size and risk management, right? But you know, being able to, you know, easily and fluidly take, you know, I took puts here, scalp that out, saw the demand here, right on VWAP, we take the entry, right, get a push up on the 365s all the way up to the supply, right? You scale along the way. Where would I scale in this trade if I took an entry there? Okay, you have the most recent resistance. You get a higher high, you scale out. Look at this one. You get a higher high from that resistance. You scale out. Oh, we're kissing supply here. Scale all out, or scale, or leave a quarter, leave a tenth or a quarter, you know, on the possibility that you break out of this. But I would rather take the money that is consistent and right there in front of my face. Let me catch up on the last question. Sorry, guys. How do I scale on higher high pivots when you're only taking 1 to 2 contracts, though? Anai says, I've tried this, but end up missing the meat of the move as I don't hold even through the EMA, even though the EMAs are holding because we got a higher high. So remember, you have to identify always what price action is telling you. Is the current trend trending, or is it channeling? Is it ranging, right? That's going to give you the opportunity to hold on for higher highs. So even on this trade, right, this is an all-day grinder. Okay, you're getting higher highs consecutively. You get higher high here, higher high here. All right, all of these higher highs. For myself, I'd scale, right? Because I can hold a larger position. But if you are only trading one or two contracts, okay, if you're only trading one or two contracts because you are learning, right? You're learning, right? You're not completely confident in your setup or trade, or maybe that's just your risk management. Your goal is to not make money. Your goal is only to put on good trades. So let's say you take a prime entry there for the long and you scale out here. You only have one contract. You scale out on the higher high. Okay, that's not a bad trade. A lot of people are like, oh man, it ripped the rest of the day. Would you have really held that long? Right? Do you really trust yourself to hold from this point, right? 12 o'clock all the way to 2:30, maybe 3 o'clock. Maybe you would have gotten stopped out there and due to theta decay, been flat, right? Take with what's consistent. Be happy with what you have. A lot of traders are dying to be green in a day, or dying to get a green trade. You just took a green trade. Be happy with that. If there's other entries presented to you, then sure, take them. But the thing is, Anai, right? I want you guys to be able to have positive experiences in your trading, right? That makes a world of difference when you are trading. So, compared to, I saw someone talking about, they took a lot of losing trades today. They're feeling really down about themselves, this or that, yada, yada, right? But compared to the trader who's only taking that consistent trade, if you get a move like this on one contract, right, maybe it's 20-30%, take the move, be happy with it, move on, look for the next trade. And if there's not a trade presented to you, you don't have to take the next trade. There's not one. Over position sizing, sir. Sure. So off the open, I see a ton of new traders burning out of their buying power the first 30 minutes or to an hour. If that sounds like you, you're doing it incorrectly, right? You're trading this in the wrong kind of manner, right? Because we can see that, hey, everyone thinks that off the open, that's all the opportunities, that's all the volume, blah, 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 yada, yada, right? That's not true. Okay. We've been going over, stacks time, and I was calling it 10:30. I just want to call it, this area or time frame of possible reversal, right? So, what you guys can kind of look for. And last week it was 10:30, right? We were trading. You guys heard me possibly on 100 Millions podcast or the Halt podcast with Thick Teddy and Ant, right? Calling it 10:30 stacks time or whatever else, right? This week it's been 10. It's been 10 a.m. So, we can see here, big push down. Look at this candle. What time is that? You guys see the time right here where I'm hovering over 10:05. That's the point of reversal. Look at the day before, right? 10 o'clock, right? You get a kind of mini reversal. It's not always going to be a true reversal, but you do get a sense of a pullback or some sense of weakness or people offloading, right? Look at this. Off the open right here. Pushes down. What time is that? Right at 10 a.m. You take the reversal. Okay, pushing up there. Look at this time. What is that? 10, 10, 10, right? That general area. Look at the reversal. Big push down. So, look out for that. It may be 10, it may be 10:30, just be aware of that. I think this happened at 10, and then right here, 10:30 right here, you got another reversal, so just be aware of that. If I'm telling you to be patient off of the open, wait 30 minutes, wait an hour, it's because that's what large participants, much more knowledgeable and experienced traders are doing, right? There's no need to get in on the open or anything like that. Sure, you see a huge move, this or that. There's a lot of opportunity. The best thing that you can do for yourself is to remain disciplined. If you see something ripping, but that there's not a strong entry there for you, and it's not something that you can consistently replicate, then it's probably not something that you should force a bad habit on or, continue to trade because, you can't refrain or, be obedient in the fact that this is not a quality setup or a quality trade. Another thing I wanted to go over was one of those trades. So I wanted to break down this trade a little bit more, right, where we took those 365 calls right around lunchtime, right before I logged off. Okay. Right here, Jay Huge and I were talking about it. He was like, hey, there's a doji method right here, right? If you guys haven't checked it out, I have a one second. I have a YouTube video covering over the doji method on my YouTube channel. Right here, right? The doji bar strat. Check that out if you can. This is we're gonna go over how we use that today and how I traded it. But remember, off of strong momentum, right? Look for doji. When you get a doji that shows a sign of weakness or indecision, a balance in that current point in time for price action, right? So I'm gonna clear this chart out completely, right? No supply, no demand, nothing. Just trading solely the doji bar strat. Okay. Yeah, it was great, right? So right here, you see the doji, you mark the original doji, the first one. That's just what I've been doing. You can do other things, right? Mark the resistance and the support, right? You see these two red lines here. Maybe I can I change this to white? Is it gonna pop up? Okay, there. That may be a bit more visible. You can see support here and resistance. Then I mark a highlighted area over the body. You don't have to do this. This just kind of gives me a more defined area of where buyers and sellers are balanced, where they are fighting over that level of tug of war. Okay, so the thing is that, hey, if you're going short, remember, you short the uptick. You want to shorten the upper wick. You go short there and you go long down there, right? So I'll type this out, right? Long entry, so calls, right? And then short entry. Okay, you see that. Short entry, the upper wick, long entry in the bottoming wicks. Where did we take that trade today, right? 365 calls, QQQ, tight risk here, but looking heavy. Okay, so just giving some caution, not overly being biased towards one direction or the other, understanding the strength of shorts and what could possibly happen, but the risk was rather low. You could either trade the doji bar strat, right, the support, or you have that support down there at 361 or 362 practically, right? What you're looking for the doji bar strat is the first candle to close up into the upper wick or into the bottoming wick, right? Up or down into the wick. That is going to tell you exactly when those sellers or those buyers are stopping out of their trade, right? So as soon as this candle closes on the 5-minute, look at the following candle, right? We made like a 30% trade on that. That was a beautiful trade right there. Off of one little 5-minute candle that took me a few minutes to break down. And what does it give me? It gives me support or resistance, right? So a target to scale out. Remember, if you get a higher high, you lock in profit. It also gives me support, right? Support equals risk. That is your stop loss when taking a trade. If you don't have your stop loss first, you do not have a trade. Okay. Let me make sure I'm not missing anything. Okay, so going through here, mistakes made during trading. So trend versus consolidation, right? We've gone through that, consolidation and then trending, right? The reason why traders fail when they are experiencing, trading the channel or the range compared to the trend is the failure to adapt. Right, so when we are trading in a trend, some kind of key things that we can do are like hold on to winners, right? EMA tap ads, so like 1 minute, 3 minute, a very small time frame EMA ad, fitting ourselves into the trade. So like something like this off the open, you're not going to get in on the 5-minute, right? But on the 1 minute, off the open, look how many entries it provides, right? Off the 9, right? Entry, right? Entry, right? All off the 1 minute EMAs, right? That's a strong trend, right? The EMAs are going to tell you or give you the gauge of how strong the current trend is, right? But if you're consolidating, right? You have to change from, holding onto your winners, very simple, EMA holds and stuff like that, compared to consolidation, where you have to be scalping much more. Smaller time frame trades, identifying support and resistance or supply and demand, and taking trades zone to zone without worrying about if the trade's going to rip, however much higher, or break down however much lower, right? And aggressively selling, right? That you are not in a confident setup, right? You're consolidating. It's like walking amongst elephants, right? You could get stepped on if you make the wrong move at that. So, just like this. Hey, I'm going to be a breakout buyer, right? What happens? You get stepped on, right? They swat you down. Okay, compared to the dip buyer all day, short or long, right? Because if you're short, right, your dip buys like this general area, you want to be dip buying into there compared to breakout buying. Look at the short who broke breakout bought. Oh, look, I'm a short. Oh, on the 1 minute, it looks way different, right? Oh, this 1 minute candle, this is why you have to get off the 1 minute, and not completely, but use other time frames. Oh, this 1 minute, we're dumping, right? I'm gonna FOMO into the puts. What happens? It rips all day, the remainder of the day, right? Don't be a breakout buyer. Anai says, I used to short the upper wick and long the lower wick for the doji method, but end up usually getting stopped out as it reverses. Do you recommend just waiting for the candle to close? You can, right? If you need that later confirmation. For myself, I like getting the lowest risk possible for the trade, so that's what works out for me. But I feel like everyone's style trading is very different, so we need to be adaptive to our own styles, right? My circumstances growing up and my life experience are much more different, which would reflect onto my trading compared to someone else's, right? Maple Black says, do I wait for the 5 minute doji to close before entering on a doji strat? Not necessarily, right? I would ideally like to see large upper wicks and large bottoming wicks, a true doji being formed. But for the 5 minute candle, I do need to see it close for the first one or two typically, right? I need to see, like here today, 1 second, here today, right here, this was pushing up, and then it was pushing up, and then right like 30 seconds before it was about to close, it closed in the kind of line in the sand area, right back into that body. How do I deal with emotions during trades? If you were tuning into the stream today, you kind of saw like, hey, I was trading off tempo a little bit, this or that, but I remained very composed. I was like, hey, I'm not going to let the market beat me up, right? I know who I am as a trader and what my setups and trades are, and I know how to adapt to trades. So, yeah, I was a little red around this area, but on this big spike up and this higher high push, right? That's where we got back green, and it only took a few trades. I traded NVIDIA, Boeing, and QQQ, and got back green very quickly. So, the main thing, how to control or really, I talk about controlling emotions, but really we should be in tune with our emotions, right? We can look at them as something to control, but I feel like we need to have a better understanding of our emotions and be in tune with them much more, right? Respecting them. And, they are signals for our, for our mind. If I'm feeling, anxious or uncertain or angry or fearful or anything like that, right? Those are sensors or little signals that are telling me, for a reason why I feel a certain way, but it may be the wrong kind of emotion at that given time, and we may give too much weight or too much kind of analysis into that emotion, which may lead us to bias. So before I continue, right, these are sessions that we do in the Patreon. I still have a few more topics to cover, but these are the sessions that we do in the Patreon, right? I have an entire library of all of these sessions recorded. We do all of these each week. I do about 4 to 6 really each week. And these cover all of our strategies, 9 and 20 EMA, supply and demand, doji bar strats, right? how to trade, slow or choppy markets, consolidation, how to hold on to winners, buying high, selling higher, right? This entire library, as well as, let's see, we'll pull it up right here. Okay. Yeah, right here, right? This is the kind of breakdown. Right, Discord daily live streaming, 46 hours. I start pre-market prep at 8:30. I'm streaming all week this week, so this is kind of your introduction to the Discord, what we are doing, the work each day, day in, day out. Pre-market prep starts at 8:30. I go through each morning. We select contracts and break down the indexes and kind of the direction that the market is quite possibly heading in, right? Reading the price action as well as, what indicators and everything are telling us. Picking those contracts. And then it's not just like trigger levels. These are situational contracts. Remember, I'm not a breakout buyer, so I don't like triggers like inside bar plays and stuff. I need to see a break in base, right? A retest of that level. As well as live EDU sessions, just like the one that we're having now. The EDU video strategy skill set library. We cover trading psychology, trading watch lists, right? I walk through trades. Day in, day out. I spend a ton of time in the Discord and focus on this. So we've got a great group growing. Lots of members who are consistently, making profit and learning how to trade or who they are as a trader. So moving forward here. Moving forward here. Where am I at on my notes, right? I know that a lot of traders become enamored with trading the indexes, right? I want to trade SPY all of the time. I want to trade QQQ all of the time, this or that. That's fine, but look elsewhere when we are chopping around. I know that it is very important to watch the indexes at all times, right? But you guys will see, hey, what have I been trading consistently this past week, right? Boeing, right? I've been trading some NVIDIA. I've been trading a lot of other things that are in the holdings, SPY or QQQ, but not being so subject to the consolidation or chop. I feel like the indexes chop around much more compared to some of these others. So, let's look at SPY today. SPY today, right, consolidated pretty much all day, then had a breakout end of day. Okay, but look at Boeing. Okay, we traded Boeing today. Very nice trade. I wish I had stuck on it a little bit longer so we could have got this hold, but we took this trade right there off of that entry, and I was all out into the supply zone right there, right? All out there. So really nice trade. Could have held on for a little bit more, but I don't really care, right? We took the end of day kind of scalp, or middle of the day. We took a 90 MA tap there, scaled more onto that supply gathered from the hourly. But Boeing, we saw that. So I'll go back to SPY. We can see that this is unfavorable, very difficult. No. I'm still holding Boeing, but I'm talking about that first trade. This was ranging, channeling all day right here, right? But look at Boeing, right? Look at your other kind of trades that may be holding on to a trend or not consolidating or ranging as much, right? Look around. So, I keep the QQQ summary. Some of these are not in the Qs, but I do keep this up so I can look at some other things to trade that may have a stronger trend. You can really gauge on what tickers are being held as stronger sentiments compared to those who are weaker. So, we'll go to QQQ, right? QQQ yesterday on Monday moved up all day, right? Moved up all day. But look at Microsoft from yesterday. Not today, from yesterday, so Monday, right? QQQ, remember, we just said it was going up all day. Microsoft showing lots of weakness, right? It's not just going up. So this is a prime opportunity to take advantage of those weaker names, shorting the pops, right? Selling at the very clear, support level from pre-market, right? Much lower risk here for long. So if you are in a short position, it's a great idea to scale it out. From the hourly, right? So Boeing, from the hourly chart, right? See my supply and demand zones, demand, but supply here, left shoulder practically, was a different zone. This hadn't hit yet in pre-market. And then this was the most recent supply level right here. So this is, from the base is 207.50, I think, and this goes up to 209.50 practically, and that's that supply. So of course it's right under 210, which is a whole number psych. But looking at, Boeing in a daily perspective, right? It's a pretty weak name, but pretty respectable in the fact that it holds onto its formations or its trends. So this is obviously in a lower high, lower low kind of trend, right? And you can kind of gauge, I mean, look, why did we get such a strong push up? Because we got a lower low. Remember, if you don't scale out on the lower lows, someone else will, or they'll take your whole position, right? But it did what it was supposed to do, lower low and lower highs. This gets a lower low, we're pushing up. I'm aiming for this general area, 215, 220 area, for this to come back down for, another kind of put. I may swing these for, on the initial kind of reversal, a few further expiries out. But looking at this trend, right, we're in the middle of this trend. I'm looking, especially if the indexes are going to remain bullish, it looks like it's great to rebound up a few more points, and our swing should pan off fairly well. So now I want to talk over the indexes, right? Looking at this, right, looking at your hourly right here on the the daily, the daily EMAs, the 9 and the 20. We are here pushing. We've closed the candle over the 200 EMA, which is a very strong signal. So when we have pushed over this, you want to use this general area as support now from this point further on, if we are going to get a stronger push up. Now, noting this compared to other reversals, right, you do get, compared to like a pullback in an uptrend, right? It's like it's a V, right? Very sharp pullback, right? But when you get a sell off here, right, what happens? This is not a V, right? This is a rounding top. You get a sense of consolidation at this range, right? So we push down here. We see this V, right? That's a short pullback. Shorts just covering a little bit, locking some profit in, re-shorting. This is different because we have pushed down here, right? Consolidated, right? Consolidation can be looked at accumulation. Now we've pushed up. So now there's a new buyer that stepped in, a series of buyers that have stepped in that are looking to maintain their position and push back up to all-time highs. Now, it may not happen today, but it may not happen this week or maybe even, in the next few weeks, but that is their goal ultimately for the indexes. Now, covering over on VIX, I covered this morning, right? Beautiful chart on VIX. This is typically what VIX likes to do, right? VIX does not spend, for years, VIX does not spend an immense amount of time when it spikes up that high, when it has its large spikes up, right? We can see that it spends majority of its time in this consolidation range, right? When the indexes or some of the holdings are pushing up, right? VIX is the inverse. This is obviously when the COVID hit and the crash and everything, but even from there on, right, you're getting very quick pops up and then selling off, right, back to the bullish reclaim, right? Then a quick pop up, then back to the bullish reclaim, right? Pop up, bullish reclaim, same thing over and over. So what happened recently? We hit almost $40 here on VIX. I know that we don't spend more than 4 or 5 days when we are pushing up or rallying on VIX, right? Look how quickly this is selling off. Why does that happen, right? Since this is the inverse, buyers in the market is not going anywhere. It hasn't gone anywhere for, a century, right? Buyers are very aggressively always looking to scoop up growth kind of tickers, right? Whatever you're trading, tech, something in SPY, planes, right? Financials, anything like that. They're looking to get great dips on them. So that's exactly what happens. You don't get a ton of time, right? When there's a market crash in the housing market, how quickly are those things bought up, right? By investors, right? They are bought up very quickly, very aggressively. So we can see that this provides a very cheap opportunity. Remember, there's a lot of people, I wish I would have bought Bitcoin back at X amount of dollars, and then it's back at X amount of dollars. The weak investor doesn't buy, but the experienced investor is soaking it up. Right, that's exactly what's happened here on VIX, purported onto the indexes and some of the other holdings. But we got a quick push up here, sat here for 1, 2, 3, 4, 5 days, then we sold off. Now we're back in the bullish reclaim area where we're going to consolidate a bit. So, look for bits of choppiness, stuff like that. But we are on the uptrend currently, right? That is what we can definitely see from the macro perspective. So, I want everyone to be as prepared as possible going into the remainder of the week as well as the remainder of the month. A few quick notes before we wrap this up is that, I want you guys, if you are a newer trader or you're just not consistent at this given time, right? I want you guys to be able to ask yourself this, okay? What are your main weaknesses as a trader, as well as what is your edge, right? And if you do not have an edge, if you cannot answer that question of, hey, what is my edge? Then you really need to sit there and focus before you take on any more trades. Okay, I know that the yearning for profit is there. I know that everyone wants to be a profitable trader just to say that they are a profitable trader, right? But it's a very long process depending upon how well you can adapt or review or learn from your experiences to get to that point, right? A lot of you may be in your losing stage of your trading journey or your break-even stage, something like that, which is very frustrating at times because you'll have those great green days and then all of your hard work, you'll give it right back. But if that's something that you've been doing consistently, right? Having a good 4 or 5 day green streak and then it takes 1 day to wipe them out, right? Then you don't truly have a strong understanding of who you are as a trader and what your edge is, right? So focus on that this month and really refine your skills, right? It's a new year. Don't waste your entire year doing the same things that you did last month or last year, right? A lot of you guys have been trading for a year or more now. And I know that, you have that feeling of like, hey, I should have gotten it by now, or hey, I should have, stop. That is a form of self-loathing. Stop putting that amount of pressure on yourself. You will achieve what you need to achieve at the time that it is your time to achieve it. Okay, everything comes in due time and in due process when you put in the the dedication and hard work. Hard work does not directly correlate to progress when it comes to trading, but you will progress. Okay, it really depends on your understanding of yourself and your emotions. So a bit of a strange day for myself today, but was able to come back green. I'm looking very optimistic going into tomorrow, looking to kind of hone in on any mistakes or faults that I may have missed, any trades that I may have missed, or perspectives. It was difficult price action. Everyone had a pretty difficult day, I would say, for the most part. Now, not everyone. You're going to have that one guy who's like, oh, today was great. Today, well, like, whatever, right? For majority of people, it was not as simple of a day to trade, and that is a fact. So, I want to thank everyone who tuned in to the live session tonight, right? I will be streaming on Twitch this entire week, so to give you guys kind of a perspective of what we have going on in the group. If you have enjoyed tonight's live session, right, please, check out the link in the chat, right, the Discord link. And if you have any questions about the Discord, feel free to message me on Twitter. I'll try to get back to everyone tonight. I still have to process a lot of those refunds from those who did join from the early access for February. Don't worry, I know that you guys got double charged. We talked about that when you signed up. It says it right there that I will refund those second charges on the 1st, so no worries there. I will be going through that today as everything has been processed. So I will be up in the morning, 8:30 for pre-market prep, 8:30 Eastern Standard Time, of course. We'll go through pick contracts, talk about VIX, the indexes, NQ, and everything, and prepare ourselves for the day. Going into tomorrow, I really want to stress to a lot of you guys to identify what is the phase that we're in, right? Are we trending or consolidating? And try to push yourself to use a larger time frame, right? Try to push yourself to use maybe the 3 or the 5 or the 10 minute, which is going to simplify your trading, right? You're not taking on as much data purported from the 1 minute candles, right? You're only executing on like the 5 or something. So like right here on this downtrend, this was a 5 minute EMA tap. another one, and another one. 3 entries. Now, I showed you on the 1 minute, there was a ton more, but these are much more patient and much more stronger entries compared to the 1 minute at times. So I will see everyone in the morning, 8:30, right? You guys get some rest, hydrate, stretch, do whatever you can to prepare yourselves, right? Make sure you review some things tonight. This, of course, will be uploaded, I think, to the YouTube channel. I'll try to put it into the own Google Drive as well. If you enjoyed the session, right, check out the link in the chat. And, I will see everyone in the morning. I hope that you guys benefited from this. Oh, and thank you to everyone who subbed this evening. Sorry, I was focusing on the live session. I hope that you guys gained some knowledge, or this helped you somewhat in your trading journey. We'll have more of these this week, of course. So I will see everyone in the morning, and I hope that you guys have a good night.